either direction. You need to be very, very careful. Secondly, you have 44.5% of the float that is short. That's huge. There is going to be a short covering rally on this stock that I haven't seen since Diamond Foods a couple of weeks ago.
Folks, that statement was from my video recording of SHLD, which I posted on the blog back on January the 2nd. It's still there if you'd like to go back and take a look at it. So let's go back to the charts and take a look at what SHLD and what contrarian trading is all about. It's going out, taking a look at stocks that nobody wants. And we look for opportunities to exploit the panic, the fear of not just the small investor, it's mostly the large institutions that are panicking. They need to raise capital, they want out. But we know, we've identified that there's a large short position and the fact that the stock is at unsustainable levels, meaning technically of a sell-off, that a counter-trend rally was near. Now, I received emails when I first started touting the stock, SHLD, as a possible trade, and this is the chart that you would have seen, and they were telling me, you're nuts, man. What do you think? You're catching a falling knife, quote unquote, catching a falling knife. You're not supposed to trade that way, especially if your intent is to average your position. You never average a position. That's the theory. I don't subscribe to that theory. I believe in scaling in or averaging into a position of a stock once it reaches unsustainable, extreme oversold levels. And I believe in having a large portion of my trading portfolio, not my retirement portfolio, it's segregated accounts, my trading portfolio in 1, 2, maybe 3 stocks at any given time, because I want to get the most bang for my buck out of that trade. Now, this is the chart you would have seen when I was touting SHLD back in the early January, and it looks ugly. Look at this. This is an ugly chart. Now, fast forward. This is SHLD as of the close on Friday. You could see that we're in that dramatic downtrend, and I put out an alert to members to start scaling in to SHLD in small increments. And we would finish our buying once we saw a key reversal. And if you could, we'll go back to another chart without the annotated blue line. You can see here that it wasn't necessarily a key reversal, but we knew we had buyers here. This bottoming tail here told us we knew there were buyers, so it was safe to go in and to start being more aggressive with our buying. Now, how do we know that we had buyers down here besides the bottoming tail? Well, the key to do before you get involved with any of these stocks, before you take a look at the short interest, you want to take a look at where historical support was. We go to a weekly chart, and that weekly chart showed us that we had support, very good support, at the $30 per share level, and even better support at the $26.64 level, which was seen back in November of 2008. But the market was falling apart back then. Yes, is Sears Holdings in its own bear market? Yes, it is, of course. But this is a different situation back then because of the financial crisis. So we knew 30 was a good area to be aggressive with our buying. And if it got down to, actually, if it would have broken down below this 28.89 level, we probably would have stopped out because we would have known that, you know what, this stock is going to go down to $26.64. Let's stop out, take our loss here. We'll get back in at $26.64 and be ultra aggressive. As you can see, we were right in our buying. We had a great rally in SHLD, and we started scaling out right in here. Now, I told members, listen, I'm going to take profits off the table. If you want to stay in, let's go to a 15-minute chart. If you want to stay in, use a trailing stop loss order of 3% and let your winners run here. Let your winner run here. But at least if you get a sell-off, you get stopped out, you protect your profits, but you also, most importantly, you minimize your downside risk. That's critical. And a number of my members did that, And I sent out an email, take your wives out to dinner. It was a great trade. So as it stands right now, the Dow Jones Industrials average returned 5% for 2011. On this trade alone, we doubled the performance of the Dow Jones Industrials in 2012 with far less volatility. So contrarian investing works. It works, but you need to be disciplined in your buying. You need to be disciplined in your selling. And all you need to do is watch my alerts. And I'll tell you when I'm getting in and getting out of a stock. So let's move forward. Let's take a look at Hugoton Realty Trust. This is a natural gas play. Obviously, everybody knows what's happened to natural gas. It's in a bear market. Massive, massive. This is institutional selling on a massive scale. I love it. I think it's great. We have an RSI at just above 10, which is really extreme oversold. We have a slow stochastic, which is putting in a double bottom formation, which is exciting. It's in a parabolic sell-off. This is unsustainable. And we were accumulating for the past 3 days, building a position. And I added a lot more on Friday. I have sent out an alert to members letting them know where our price target is on HGT and where we plan on doubling our position to average down our costs. We're already down we have a 15 handle on our average basis cost on HGT as it stands right now. We want to bring it down. It's in the high 15s right now, 1587 thereabouts. We want to bring it down even further. So we want a basis cost to be around 1550, ideally, and that'll set us up for a nice short covering rally. Now, unlike SHLD, you do not have a massive short interest in this trust, this stock. There are currently, well, as of last month, 257,000 shares short. I'm sure that's up right now, so let's say it's 300,000 shares. You have a 3-day moving average volume of 185,000 shares. So technically, you're going to get about a 2, maybe 3-day short covering rally on this position. So let's look for that to occur. We are very close to a bottom on HGT. The indicators are telling me that we're there. Let's take a look at the intraday. And when I say we're there, I mean that we're a few dimes away from the bottoms on HGT. And when I do double up on my position, I will be sending out an alert to members. This is a 15-minute chart. I use Thinkorswim. Then you can see I had a nice bottom action here, and I sent out an alert on Friday morning. We added more here because we saw some buy orders come in at the 1525 level. And you could see a really nice, this is a great orderly pullback and a retest of that 1525, and it looked as if it was going to rally into the close on Friday afternoon, but it didn't yet. Sellers come in, and one guy just came in and just dumped a whole bunch of shares, and it made it look set up for not the prettiest of closes, but we did hold 1525, and for all I know, we may just hold 1525, and that's fine with me. We have so many shares right now that we'll still make a really nice killing on the stock once it does rally. Let's drill down a little bit further. This is after hours here. You did have buyers come in at the final minute as well. Let's go into a minute chart. Yeah, right in here. You had some buyers come in. So this is really nice support here. I like 1525. I would like it a little bit cheaper. If I do get it cheaper, I'll be sending out an alert to members to double up on our position and enjoy the ride up. So please, if you would like to take advantage of the 14-day free trial offer, please do so. If nothing else, if you're watching this on YouTube, sign up for my YouTube channel. Or if you're watching this on the blog, sign up for my e-alerts, and you'll receive the Contrarian Report alert, and you'll receive an email when I post videos like this. Have a great trading week, folks. Enjoy your weekend. And members, I'll be sending out the Contrarian commentary the week ahead tomorrow, which is a video for members only. And you'll receive that, and I will talk to you soon. Have a great week, folks. Bye-bye.